85% of investors are currently looking at AI as the most likely vertical they'd like to invest in the near future, in the coming quarter.
I'm pleased today to welcome Joon from HSBC to our London office. Welcome, Joon, and thank you for joining us today.
Yeah, pleased to be here.
I guess to kick things off, and it'd be remiss not to talk about this, this is the hottest topic at the moment. Everyone seems to be talking about it, it's top of mind. So we're going to kick things off with our discussion, talking about AI today. And it's a topic that's been talked about extensively across asset classes, sectors, regions. Every company is investing in the space. Established companies are looking to leverage AI to drive efficiency. Startups are looking to align themselves with AI to get investment. Not only are companies vying for investment and attraction, it's also countries and continents are vying to become powerhouses within AI regarding their policy development. There's a lot of capital being invested within the space. Valuations are soaring as well. We're seeing that within PE and VC. And we've also seen stock market growth within the US. We've seen large tech companies generate jobs, generate economic growth within the US, and Europe are really trying to play catch up with the US regarding that. And AI seems to be an area that's really, really positive at the moment regarding private markets. Our data has shown strong investment levels as well within the space. So what are you seeing regarding AI at the moment?
So in terms of investor attention and preference, we look at it from the lens of a proprietary survey we run called Funding the Future Survey. We run it quarterly, and we've managed to cast a wide net. The survey respondents represent around $3.5 trillion of assets under management, of which around 1.7 trillion comes from private markets, so VC investors, private equity investors. So we think any of the insights we can take out of this survey are really valuable. And ever since we started running this survey, which was April of 2024, AI has definitely been at the forefront of investor preference in terms of sentiment, in terms of what opportunities they're trying to look for, and not just in tech, but across different sectors, almost as a vertical horizontally. In this survey, in this iteration of the survey that we've run, around 85% of investors are currently looking at AI as the most likely vertical they'd like to invest in the near future, in the coming quarter. And that's on top of when the headline number from the survey is really bearish. So the investor confidence in private market has really taken a beat down since the beginning of the year on the back of uncertainty around tariffs, geopolitical issues around the world, and about only 1/3 of the investors that we surveyed currently expect private market activity to increase in the next quarter. So taking a look at all of this combined, we think AI as a vertical is uplifting the sector, private market, quite a bit. Investors are really looking at AI investments in a different light to non-AI investments, and are still happy to go ahead with deal activity, even though overall the sentiment seems a little bit more skittish.
And keeping along the lines of investments by sector, we look at different verticals and try to categorize where investment may be increasing or decreasing regarding certain sectors. AI has been a standout area. Within Europe, we've also seen SaaS and fintech generally come out on top when we rank VC investment, in particular in Europe. When we looked at that same metric in our Q2 venture report, looking at investment levels across verticals, we also saw life sciences and health tech emerge within the top 5 to 10 verticals within the region. So we're seeing a diverse set of verticals receive investment. And I noticed that you've got your 9 core themes that you tend to focus on. And what I thought was really interesting within that survey was that the 91% voting, or respondents voting for that, disruptive tech being the main theme that's going to invest future investment decisions and influence decision-making moving forward. Are you able to maybe talk a little bit more about that and what your kind of 9 themes focus on?
At Global Investment Research, we think these 9 themes are fundamental to long-term investor sentiment and investor activity. And we do think that they're going to reshape the financial markets in the coming years. So we thought it would be interesting to put the question in front of the investors from the survey to see which of these 9 themes play a big deal in their investment strategy in the near term, and what will be of these themes. That's something that they're going to be keeping a great deal of eye on when they're thinking about their investments in the coming year. And as you say, disruptive tech was on the top of that list. It was 91% of the investor base said that that's the one that they're really thinking about and is at the forefront of their mind. But followed closely was automation, second in line. And I think AI and disruptive tech is giving a big uplift to automation sector, as well as more AI applications are go through different sectors, and also as we see more AI application being used in different use cases, not just from the company standpoint of view, but also from the consumer standpoint of view. So automation clearly is also something that investors are keeping a track on.
And are you able to talk about some of the specific sector trends that you're seeing within the market?
So 2 sectors in particular kind of stood out in this iteration of the survey, healthcare and tech, both high growth sectors, but following a different theme here. Let's talk about tech first, because we've been talking about tech. So after the uncertainty we saw on the back of Liberation Day in April, tech investors, both in listed sector and in private markets, were a little bit more skittish. They were unsure what's happening. But that's kind of shifted now. We've seen that in public markets. Public equity markets are doing great. And even in private markets, according to a survey, investors are more bullish on tech in the near term. In terms of allocation, around 56% of investors are overweight tech in the current iteration of the survey, and 1/5 investors are saying that they are expecting to increase that overweight in the near term. Healthcare, on the other hand, is a different story. Healthcare investors previously were more bullish on the sector, I guess because it appeals to the defensive nature of the sector. But in this iteration of the survey, healthcare has taken a stand back, and investors are more neutral on the sector. They're not outright bearish, but they've taken a more neutral stance, and they're looking elsewhere for possibilities. Talking a little bit about regional differences, sustainability was something that kind of came into play as well, and that I think has a little bit more impact on sectors which will do well in different parts of the world. So when we reach out to investors assessing which different themes are tailwinds and headwinds to their investment preference and investment strategy, investors in Asia and MENA said sustainability is a tailwind to their investment process. However, investors in Europe and in America suggested that it's likely a headwind. So there was a clear regional difference there. And that makes me think that deals and companies around things like battery infrastructure and battery tech and energy related deals, those perhaps are going to have a better velocity in Asia and MENA in the near term.
That's super interesting that there's like a regional split within the way people view sustainability, and certain regions may be more heavily policy driven in those areas. Certain regions may rely a bit more on oil, things like that, and looking more at a kind of green transition for clean energy, things like that. So it's interesting to see that, and a lot of political environment as well regarding sustainability, obviously in the US, and then even in Europe as well. It's a mixed bag with different policies for different countries as well. So I thought that was really interesting in the survey. Moving on to some more of the drivers and shifts in trends we've seen within the market. Some interesting points that I thought were quite noteworthy within the survey were that 2/3 of the respondents thought that there'd be an increase in activity in the next 12 months. I thought that was very bullish and probably realistic as well. We are probably over the worst of market conditions, and we are maybe past the trough, and maybe things are going to increase regarding activity in the next 12 months. Other factors that I found really interesting were that 85% think political risk is a headwind. I think that is pretty universal and pretty expected across respondents and capital allocators within the market. It's a very volatile time. There's a lot of talk around geopolitics, tariffs being another area that we might talk a little bit more about as well. And then the third point that I thought was really interesting regarding the respondents was that 76%, or 3/4 of the respondents, felt that the speed of change in tech was the main tailwind regarding investment levels. So I think all three of those answers are in line with market expectations. Geopolitical events, geopolitics as a whole are being talked about a lot. Tariffs have been a mainstay within discussions so far this year. Are there any other drivers or points you want to talk about in terms of geopolitics or tariffs that you think are impacting some of the sentiment respondent rates that you've seen?
Yeah, like usual suspects, as you say. I think protectionism and the political risk. I think the clue's in the name there. Yeah. So I think it's not surprising that majority of the investors kind of look at it as a headwind. I think if you dig a little bit deeper into the survey responses, a lot of investors responded with not just political risk, but uncertainty as a key headwind there. The not knowing in healthcare sector regarding regulation, or even going back to ESG, is like the ESG regulation and the different phrase of it in Europe and also in the US. I think that's from education standpoint and also from investor standpoint, from fundraising perspective, I think that's a key headwind in the sector, definitely. Protectionism, although is still a key headwind, I think 81% of investors in this iteration of the survey said protectionism is a key headwind. It's gone down a bit. I think in the previous iteration of the survey, it was even higher. So as and when we see more clarity on the trade deals that have been happening in the world, I think that's going to take a little more pressure away from the investors' appetite and probably like clear things up for them. In terms of tailwinds, yes, I think speed of technological change has been like the primary force there. I think that aligns really closely with AI as well. We've seen how quickly things change in the world of AI. 2022 November, I think ChatGPT was announced, and since then it's like we've seen a wave of these new applications and tools which are available. So that's definitely something that investors see as a positive. The other positive tailwind investors see is the availability of key talent. We are seeing more and more people are trained in using these new technologies and tools, and likely we'll see new applications out of those, which are also perhaps painting a more greener picture in terms of longer term horizon for the sentiment. And as you said, yes, I think 67% of investors expect VC activity to increase in the longer horizon. If you look at the trend from our survey, that's gone down a bit because of the uncertainty. But you're right, I think the recovery cycle is definitely on. And these new things are definitely going to push that cycle even further.
Another area that's been talked a lot about this year, and we've talked a lot about in our research as well, is the exit environment. So the macroeconomic environment has not helped with exit flows. We've seen a decline in exit flows since 2021. Now, you can argue that 2021 was an anomalous year. There was cocktail of market conditions, low interest rates, pent-up demand post-COVID-19. So everyone wanted to list or exit. Valuations were sky high then. Since then, we've seen a decline in valuations. We've seen exit appetite drift and decline since. And our data has shown that exit levels across PE and VC in Europe, the US, no matter how you look at it, it has declined. And maybe it's flattened a little bit so far this year. And that's maybe been underpinned by a few listings trickling through. We've also done a bit of analysis regarding the IPO window. So we looked at volatility and valuations within some of our research so far this year. And we've updated that. And we think that it could be until H1 2026, until those volatility and valuation metrics align for an IPO window to recover and companies really push the button on more listings. What are respondents thinking when it comes to exits? Are they bullish? Are they bearish? Are they flat? Do they think that a recovery is going to take place in the next 3 months? Or are you looking more at a H1 2026 situation? Or are they waiting and seeing, do you think?
Yeah, I think we are seeing the similar things in the survey as well. The IPO outlook has definitely weakened amongst both private and public investors. So it's interesting to see hard data from your side is backing the soft sentiment we're seeing amongst investors. Less than 50% of investors in the private markets are now expecting an increase in IPO activity for the remaining of the year. And in listed markets, in the public equity sector, it's even worse. About 23% of investors are only expecting an increase in IPO activity in 2025. The remainder are expecting it to stay the same or even weaken. And the culprit is, again, the uncertainty that we are seeing in terms of protectionism, trade disputes, and also economic uncertainty on the back of macroeconomic problems. However, that has not restricted investors to go look out for exits. When we reached out to investors and asked, are they expecting to exit any of their portfolio of companies? 83% of investors came back saying they are looking for exits in 2025. I'm assuming because they're looking for liquidity. So even though the IPO outlook has weakened, investors are still expecting exits in 2025. And when we kind of went in a little bit deeper and asked what is a preferred route of exit, over 60% of investors said buyouts and trade sales are the preferred avenues of exits rather than IPOs. So looking forward, I think from what we gather from the survey, I think the exits are still going to be continuing and more likely via buyouts and trade sales and even perhaps through secondaries because investors are looking for those liquidity events.
Yeah, one thing, I think the one thing that I'm looking out for is that flywheel returning, is that return rate increasing within VC or PE and exits being generated and seeing what that looks like. And ultimately, if exits are generated, investors are getting their capital back, LPs are getting their capital back, and that's going to be recycled into new VC funds, new EP funds, and funding the new wave of startups. So that's the kind of one thing I'm looking out for in the rest of this year and early next year, because it has been a relatively dry spell for exits. And when we look at some of our valuation data and unicorn data, we've got around about 400 billion euros in valuation, just unicorns based in Europe. And that's purely on paper. None of it's been realized. These are just valuations tied to latest financing round for some of these companies. And if a small proportion of that decided to exit, that's a lot of liquidity for the market, a lot of capital potentially being returned to investors. And that should bode well for private markets moving forward. Is there one thing or area that you're really looking forward to as we close out this year?
I think I'm looking forward to a higher deal-making activity, especially in sectors like healthcare moving forward. Because when we reached out to investors in terms of where do they see exits in the remainder of the year, what verticals, and surprisingly, 50% of investors said AI, which we've been talking about this entire discussion. But 45% of investors said biotech, biopharma, and also around the same number said medtech as well. And if I go back in time, at the beginning of the year when we ran this survey, about 81% of healthcare investors were expecting deal-making activity in the sector to increase. So I do think like once the uncertainty blanket of tariffs and disputes kind of goes away, I do think like healthcare deal-making activity is something that perhaps investors would be keen on in the near term.
It's been a really interesting discussion. Thank you for joining and look forward to chatting in the future.
Yeah, likewise.